What would happen if one of the most important arteries of the global economy suddenly stopped pumping? Imagine waking up to headlines confirming that the Strait of Hormuz has remained closed, not for hours, but indefinitely. This narrow strip of water between Iran and Oman carries nearly 20% of the world's oil supply. It is the gateway for exports from Saudi Arabia, Iraq, Kuwait, Qatar, and the United Arab Emirates. If this passage stays shut, the consequences would not be regional, they would be global. In this video, we are going deep into what would happen to the stock market, oil prices, and crypto if Hormuz remains closed, and why this scenario could trigger one of the most volatile financial periods in modern history. If the Strait of Hormuz were to remain closed for an extended period, the shockwaves across global markets would be immediate, violent, and historic. It is not just another shipping route, it is the world's most critical oil choke point. Roughly 1/5 of global oil consumption passes through this narrow corridor. If tankers stop moving, the global energy system doesn't adjust slowly, it panics. Oil prices would be the first to explode. Brent crude could spike dramatically within hours of confirmation that the closure is sustained. Traders would price in supply disruption immediately, and speculative momentum would amplify the move. A short disruption might send oil up 15 to 30%. A prolonged closure could push crude toward levels not seen since major global crises, potentially well above $150 per barrel depending on duration and military escalation. Strategic petroleum reserves in the United States, Europe, and Asia would be tapped, but reserves only buy time. They don't replace continuous supply. Energy importing nations would face inflation shockwaves almost instantly. Shipping insurance premiums would skyrocket. Freight costs would surge. Energy equities might initially rally, but broader market fear would likely overwhelm selective gains. The stock market reaction would likely be brutal at first. Wall Street hates uncertainty more than bad news, and a closed Hormuz signals geopolitical escalation risk. The S&P 500 and Dow Jones Industrial Average would likely gap down sharply in the opening sessions following confirmation. Airline stocks, logistics companies, manufacturing, and consumer discretionary sectors would take heavy hits due to fuel cost pressures. Tech stocks could initially drop as investors flee risk assets. Defense stocks, however, might surge on expectations of military involvement and increased government spending. Gold would likely rally as a safe haven. Bond yields could fall temporarily as investors move into US Treasuries, unless inflation expectations spike so aggressively that yields rise instead. Markets would be torn between recession fears and inflation fears, a toxic mix reminiscent of stagflation. Now, let's talk about crypto, because this is where things get complicated. In the immediate hours after a confirmed closure, crypto would likely drop alongside equities. During acute crisis events, investors often sell what they can, not just what they want. Liquidity matters. Bitcoin initially sells off as traders reduce leverage and margin positions unwind, so you could see a sharp dip in Bitcoin and Ethereum at first. But the second phase is where narratives shift. If oil spikes dramatically and inflation expectations surge, central banks face a dilemma: tighten policy to fight inflation or ease to prevent recession. If governments respond with liquidity injections, stimulus, or monetary expansion to stabilize markets, crypto could pivot from risk asset to inflation hedge narrative again. Investors who lose confidence in fiat stability during geopolitical conflict sometimes rotate capital into decentralized assets. A prolonged closure would also strain global dollar liquidity. Energy transactions are largely dollar-denominated. If trade flows are disrupted, it affects dollar recycling mechanisms. In extreme scenarios, countries may accelerate alternative settlement systems to bypass geopolitical choke points. That's where blockchain infrastructure conversations resurface, not in hype cycles, but in crisis-driven utility demand. However, we must separate speculation from structure. A Hormuz closure is primarily an energy shock. Energy shocks historically slow global growth. Slower growth reduces corporate earnings. Reduced earnings pressure equities. If central banks remain hawkish due to oil-driven inflation, liquidity tightens, and tight liquidity is generally negative for crypto. So the medium-term outcome depends more on policy response than the initial event itself. If closure leads to direct confrontation involving major powers like the United States and regional actors, volatility multiplies. Cyber warfare risk increases. Financial infrastructure could become a target. In that type of environment, Decentralized systems might see ideological adoption, but markets overall would be extremely unstable. If the closure lasts several months, global GDP forecasts would be revised downward. Strategic reserves would deplete. Energy substitution takes time. Inflation could re-accelerate globally just when central banks believed it was under control. That creates a dangerous policy trap. For crypto investors, this scenario becomes a volatility storm. Short-term, likely drop. Mid-term, depends on monetary response. Long-term, possibly stronger decentralized adoption if geopolitical fragmentation intensifies. But during real crises, correlation spike diversification temporarily fails. So if the Strait of Hormuz remains closed, we are not talking about just higher fuel prices at the pump. We are talking about a global financial shock that could shake oil markets, crush equities, and send crypto into extreme volatility before potentially reshaping its long-term narrative. The key factor would not only be the closure itself, but how governments, central banks, and global powers respond. Markets move on: liquidity, policy, and psychology. And in a crisis like this, all three would be pushed to their limits. If you found this breakdown valuable and want more deep macro analysis like this, especially on geopolitics, oil, and crypto, make sure to subscribe and stay prepared. Because in markets, information is not just power, it's protection.